Hello everyone, welcome back to the Options Professor podcast. This is Damien, and this week I thought I'd do something a little bit different. Kind of got tired going through the weekly recaps and just telling you making 30%, 40%, or 50% on each of these spread trades. So what I want to do in this video is show you exactly how much I've made over the past 30 days. I'll take a snapshot from my screen, we'll hop over there, take a look at the actual returns I've had for the past 30 days. And more importantly, I want to talk about these spread trades that I do and why I do them, why they work, and why they're so successful. Okay, so let's hop over to my screen and take a look.
Okay, here we are looking at my screen, and I'm going to go into credit spreads and how they work here in just a moment. I will come back to exactly how much I've made in the past 30 days towards the end of this video. So I want you to understand this strategy before you actually see the results. And so we're looking at Apple here, and the one thing that I always look for are levels of support and resistance. And if you can be confident in finding that level of support, you can then sell the credit spreads at that level. Okay, the more confident you are, probably the more profitable you'll be. So we take a look at Apple. It closed today at 113.49. So closed today at 113.49. I can see here that maybe 110 could be a level of support. Okay, the 110 to me looks like a level of support. Now, obviously, if the market is still going to go down, this could break through 110. But let's say 110 looks like a great level of support, and that's going back even 3 weeks. We can see all the way to the left here that we're still at 110 support. And so what the strategy says is you could sell a put at the 110 level and collect credit. The problem with selling the 110 put without having any protection is that you could set yourself up for a pretty big loss. So if Apple drops to $90, you could be in the hole quite a bit. And so what I do with the spreads is I buy a 105 put, and that is my protection. So this is a $5 wide spread. Okay, on one contract, that means I could lose $500, but I'm also collecting credit for the 110 put. So your actual loss will be $5, which is the total spread, minus whatever credit you collect. Now, I'm not sure what the credit is right now. Market is closed, so it's not going to be accurate. But let's just say it's $1.50. The $1.50 is a net credit between selling the 110 put and buying the 105 put. That means I would collect $1.50 for one contract with a risk of $5. My total risk here is $3.50. Okay, on one contract that is collecting $150 and risking $350 to make that $150. So that's the ratio. Okay, now this strategy all comes back to how confident are you in that support level. You will hear me talk about levels of support or levels of resistance on the top side when I'm going through my watch list. And that is because those levels to me are very important in selling for credit. Okay, 90% of my trades are these credit spreads, whether selling a put credit spread on the bottom because I want it to stay above a certain level, or a call credit spread on the top because I want it to stay below a certain level. And if you've been following my podcast, you can see that 90% of the trades I'm actually making money, and I'm making 30% on average. Sometimes I take less if I take it off early. Sometimes I make more if I structure something a little bit more aggressive, but it's always been within that 30 to 50% range. Okay. So looking at Apple, I would say going into next week, maybe a 110 level of support. I do like this 110 level of support, but again, we have some weakness in the NASDAQ. Maybe I want to sell calls on the top side. And if I look at the top, well, maybe the 125 is a good resistance level. And for whatever reasons, whatever indicators you're using, in this case, I'm looking at Keltner channels. And this is a different magnitude Keltner channel than everyone else uses. So it is a little bit of a different strategy than most people are used to looking at when they look at Keltner channels. And maybe I'll do a video on that someday. But if you're looking at my charts and you see these red lines, I'm using that really as my range of where the stock can trade up to and or down to. Okay. So pretty straightforward in that aspect. Now, the one thing that we cannot protect against is our news, right? If there's news happening and it's going to move the stock. And so if you can see here, Apple is really just trending up at this point, and then it hits a wall and does the sell off, and we can see the market from Thursday last week into this week has been selling off, and we have this weakness. Now, I can't really predict what's going to happen with the overall market, with the news, through earnings. Somebody might send out a tweet that would just drop the stock or pump it. That type of movement is not going to help a credit spread type trade. Okay, that we don't really want those unexpected moves. What's really nice with Apple was this gradual sideways movement, maybe a little bit bump up, and then some more sideways movement and a little bump up. And so in here gives us an opportunity to collect credit week over week on the put side, selling puts. And then if it's going to continue down, the best plan of action is maybe to sell calls on the top side, because now we can see moving averages it's dropping below the moving averages. This here's a 50 moving average, or sorry, this one here's a 50 moving average. This one here's a 200 moving average. And now it's below both of those. Okay, so whatever indicators you're using, this does look like a bearish movement, but then again, anything can happen with this market where the government comes in with a stimulus package and now we're trading back up to 125. All right, so this strategy is not that difficult if you can identify those support and resistance levels. So watch out for those when I call them out in my watch list Sunday nights. All right, let's switch gears and start looking at how these trades have been doing for me every week. Now, you heard me talk about, the 30% winners, the 40% winners, and so forth week over week. Even last week with the market coming down, I managed to turn a profit on these credit spreads. But how do these add up? So I wanted to bring up my trading tracker. And here I'm using something called Wingman Tracker. If you've not heard of it, you can go to wingmantracker.com. It's a great application that will automatically track your options trades, even if you're doing spreads. I think the biggest problem for me was tracking my trades inside of a spreadsheet manually. And now I've found Wingman Tracker. They do have a 30-day trial. And if you are listening to this podcast, you can get a 50% discount off your first year. Okay, that code is ready to eat altogether. I will not put that in the description, so hopefully you're watching this video to get that discount code. That is 50% off your first year after your 30-day free trial. And so what I'm showing you here is everything going back exactly 30 days from today. So August 12th to September 11th. And these are all of my trades, as you can see here, and these are just sorted by vertical shorts, whether they're a short put spread or a short call spread. These are all my credit spreads over the past 30 days. And as you can see here, over the past 30 days, I've made a bunch of trades and have only logged 3 losses. Okay. Now, if I want to go to the analysis tab, it will tell you exactly how much I've made over the past 30 days. Total realized P&L is $8,800, and I've held 19 positions. Now, this is not an active, like a real active day trading type strategy. Typically what I do is I put in maybe 3 to 5 of the trades, the credit spreads week to week, 1 week or 2 weeks out. I either let them expire and go worthless, or I buy them back at a lower price than what I sold them for. And so you can see my win rate here was 85%. I actually consider that terrible because I'm usually swinging around 90% and above. But this is an 80% win rate for a P&L of $8,800 over 30 days. And to me, that is way better than some of the other strategies I've tried. And it doesn't take a lot of effort. It doesn't take a lot of work to actually go in and do any more than other than look at the support and resistance of stock. Okay, so that's the strategy I use. These vertical credit spreads. I'm not going to teach you how to do them. There are a ton of videos on YouTube that you can go look at, but it's been very successful to me. Doesn't take me a lot of time. I 5-10 minutes to find these trades, put them on. I do, yeah, like I said, about 5 trades per week. And as you can see with my weekly recaps, I am closing these out on average about 30 to 40% of profit on each of these trades, and they do add up. So.
All right, everyone. Hopefully that was useful for you. I really enjoy the credit spreads because they're low risk to me. I think I have a high win rate, high probability to win, and they've been doing well for me this entire year. As you can see from my podcast, the recaps, the watch list, I want to make sure that you understand exactly the strategies I'm playing week to week. So thanks for tuning in, and come back Sunday with a whole new perspective on my Sunday watch list. Thanks.